Hello everyone, I'm Wall Street Reporter. Today I want to talk about the Asia stock market in China. Well, in today's video, first of all, analyze the Asia investor structure and the meta classification and characteristics of Asia stocks. And finally, I will give the core factors affecting Asia trends and detentions methods, and the survival guide for beginners. And finally, there will be a summary and an outlook for the Asia market. First of all, investors. Well, the majority of stocks are held by industrial capital. They compose of major shareholders of listed company, including legal person and individual holding original or increased shares. They tend to reduce holding at market peaks during bull markets and increase holding to stabilize the market during bear markets. Next part will be individual investors. They are highly active, contributing 70 to 80% of market trading value, with a clear tendency of chasing rising prices and sales in panic. Well, and they are, however, the retail investors are easily driven by emotions, with frequent trading and weak risk control being the main cause of the losses. And also they lack a long-term investment philosophy and are highly sensitive to the short-term fluctuation. Next will be the government-backed funds. Well, they just like a industrial capital. They usually will raise the markets during panics and sells to stabilize fluctuation during overheating. And then we can see that, clearly observe that they play a key role during significant market fluctuation by conducting center cyclical operations and stabilize market confidence and maintain market stability. And besides that, we can here are domestic institutional investors. Most of them are public funds and supplemented by insurance, social security, and private equity funds. Although they focus on fundamentals, they are forced to chase rising prices and sell in panic due to retail investors' subscription and redemption behavior. Well, finally, there are foreign investors. They are the leaders of value investments. Well, they prefer blue chip stocks with continuous inflow in recent years, and they enter through Shanghai, Hong Kong, and Shenzhen, Hong Kong stock connects. Well, let's talk about the A-share stocks. If we classify them by market value, well, they are large cap stocks, mid cap stocks, and small cap stocks. The large cap stocks value exceeds 100 billion yuan, such as industrials and commercial banks of China and PetroChina. They have low volatility and high dividends, often exceeding 5%, acting as a market stabilizing cornerstone. Next is mid-cap stocks with a market value between 20 billion and 100 billion yuan, such as industry leaders in specific fields. And finally, there are small cap stocks with a market value of less than 20 billion yuan, such as Guodong shares. They have high volatility and are easily subject to speculative capital manipulation. If we classify stocks by volatility and trading activity, well, they are blue chip stocks and growth stocks, semantic conceptual stocks, and cold door stocks. Each of them represent each of them are in different specific markets. For example, blue chip stocks, they usually are banks and energy. Growth stocks, they are science tech innovation broad. And semantic conceptual stocks are usually in the very well innovative markets like brain engineering, quantum technology. The cold door stocks are in industries like steel, coal. Well, so for example, in 2024, your active trading sectors like AI, supported by the policy, and the central SOE stocks driven by the SASAC's market value management policy. And the high dividend stocks are also increased a lot in 2024. For example, the bank industries grows by 40% in 2024. Now, how can we detect the Asia trends, and what are these methods? First of all, we should observe and notice the macro and policy factors. For example, first of all, GDP growth rate. A rate above 5% is favorable for the market. Well, if the growth rate is below that, that is negative factors to the markets. And also, we should notice the policy signal. For example, track the state councils and SASAC documents. Usually, if we pay attention to the PBOC's MLF operation and reserve requirement ratio changes, we can observe the policy signal. And also, we should notice that so why we need to observe this? Because they have significant impact to the market. Macroeconomics and policy factors are the core factors affecting the Asia trend. Their changes have important guiding significance for the market trends and investment decisions. Next part will be market structures and sentiments. We can observe the volume changes. For example, if the market transactions is above trillion yuan, that means that we can predict the markets, it can get into the continuations of the trend. However, if the market transaction is below that, then we can predict that there probably will be some depression. Also, notice the financing balance, any flow directions of northbound funds. Finally, besides that, we should also notice the international linkage and events. For example, if the US stock market grows, the Asia stocks probably will grow. Well, in opposite, the Asia stocks probably will go down too. Also, geopolitical conflicts can also transmit the panic through the exchange rate. Besides that, the international linkage and events. So we can notice that the international linkage and events are important factors affecting the short-term Asia fluctuation, and their changes have an important impact on the market sentiments and capital inflow. Also, so that part is about the macroeconomics and economics. Now, let's pay attention to the company fundamentals. We should focusing on the earning focus, dividend yield changes, and market impacts. So, in summary, we should notice the macroeconomics factors, policy trends, market sentiments, international linkage, and also some company stocks like their debts, how much money they spend on investments, and do they have any earning increasing earning forecast, whether their dividend will change by increasing or decreasing. Those are the factors we should notice. Well, here are the survival guides for the beginners. So, first of all, please notice, avoid this three trap. First of all, avoid frequent trading traps and the value investment trap, because the blue chip stocks can also experience corrections of the overvaluations. Finally, please focus on the investments for the psychology. Maintain a rational investment mentality and avoid blind following and emotional trading. And then establishing a trading system. You can use the technical analyze, focus on the value, price breakthroughs, or fundamental analysis. Focus on central SOEs with dividend yield greater than 5% or emerging industries. Or you can just use the investment, or you just can just combine the technical and the fundamental analysis. And so after you build up your own strategies or trading strategies, please have a timing strategies. They are left side layout, enter during panic and one new contractions, or you can choose right side follow up. Follow up when trading value increases and policy benefits resonate. Or you can just combine it. You can add 50, you can buy 50% on the left side and buy the rest of them in the right side. Now here is the summary. First of all, we should know the characteristics of the Asia markets, focusing on the policy and sentiment. It is a policy and sentimental markets, and noticing on the yourself's investment philosophy and the market trends. For beginners, please start with low volatility blue chip stocks. Gradually learn technical analysis and avoid blindly chasing hot topics and reduce investment risk. And please control the risk and learn through all your investments. Now, after you build out your own systems, your strategies, and we can just put the theories into practice. We can here are the examples, here are the history events of the review of air-share bulls and bear cycles. To help you better understand what I have talked about. First of all, from 2013 to 2015, bull market. An average-driven bull market without bull base. The Shanghai index soared from 1,849 points to 5,000 points, a cumulative increase of 180%. However, after that, the market increase entered a crash and adjustments because a liquidity crisis caused a deleveraging. The Shanghai index plummeted to 2,638 points, a maximum drop of 49 points. Well, 2016 to 2018 is a structural bull market. The characteristics is a structural bull market dominated by the supply side reform and blue chip stocks. 2018 is bear markets. Well, a comprehensive adjustments caused by the internal and external troubles. For example, the China and America trade war, and also the China have the real estate crisis. So the Asia stock market entered to the bear market. 2019 to 2021 is a structural bull market driven by the technology and consumptions. 2022 caused by the COVID-19 and other multiple pressures, the Shanghai index fell by 15.16%, 13%. 2023 to 2024 is dynamic. Actually, I can divide that into 2023 to 2024, which is a bull market. It goes to the very low index. The Shanghai index goes to the very, very low point, which is 2,600 points. However, after the government released some benefits or positive policy to the stock market, the index rapidly increased to the 3,600 points in October. So we can find out that the quality of the bull and bear cycle is the combined effects of the liquidity, policy, economic cycle, and industrial structures. Investors should grasp market trends and develop reasonable investment strategies. And that's all. Please subscribe and thanks you. I'll see you in my next video.